Hey there, Greeley. This is the Locals Only podcast. I'm your host, Jamie Eklund, a local businessman and realtor. And today we have James Clifford with Guild Mortgage back. Welcome, James. Pleasure having you on again.
Well, thanks for having me, Jamie. Always glad to be part.
Absolutely. So, James and I put our heads together and we are going to do a three-part series talking about the process of buying a home. Probably one of the most common questions that I get, and I think James gets it a lot too, is I don't know how to do this. How do I buy a house? And so we wanted to put a very comprehensive three-part series together talking about how you buy a house. And so we were breaking it up into three different points or three different segments. The first segment is going to be before you start shopping for a home. The second one will be the process of shopping for a home. And then the last one will be under contract and getting to closing. And so that's going to be how we're going to break it up. So if you're watching this and you're saying, hey, I don't need the before, I need the during or something, you can skip around. But hopefully it'll be informative. And we're going to go through this. We got some notes so that we hopefully don't forget anything, but this isn't our first rodeo. So we may be doing some ad-libbing as we go through. All right. So we're talking today about before you shop for a home. James, where do you start? What's
Well,
your
I think
thoughts?
that's a good question. And I think there's kind of two different situations or scenarios that might kind of add a little bit of variation to that. Really, if you're in the position where you have to sell a home and buy a home, there's two different things you'll need to do to start. If you're just, first-time home buyer or currently renting and whatnot, then there's obviously you don't have to get ready to sell your home. So
Yeah.
really, at this point, you really need to get in contact with either a realtor or a lender on that side of things. And I know I get the question, I'm not sure if you, I think you do too, Jamie, is like, who do I contact first? Do I contact the lender
Yep.
first? Do I contact the realtor first? And usually what I tell them is it doesn't necessarily matter. You'll end up being talking to both before too long. And
Yeah.
usually what I say is if you know of a lender you trust, call them first. If you know a realtor you trust, call them first. And then
Yep.
usually get some good referrals back and forth.
Yep. Yeah. I mean, I think that's good. I mean, if I would say, contact the person you trust the most and then say, hey, I don't have a realtor or I don't have a lender. Who do you recommend? And let that person guide you through the process.
Hmm.
Because we don't get a lot of people. I don't, I don't know if they think this or not, but I always clarify. It's like I don't get kickbacks from lenders by recommending lenders. Like if I recommend you, you don't, give me a kickback, right? That's illegal. Actually, it's
Yes,
usually a
it is
RESPA
illegal.
violation, and
Yep.
so we don't do that. But I recommend you as James as a lender because we have a working relationship. We are always communicating,
Hmm.
and for us to add a client that we can then communicate to. It's just more natural. Plus, I also trust you as a lender, and I know you do a good job. And that's why I recommend you, and that's why I like working uh, on deals where you and I, are representing, the same people.
Right. And I think sometimes people underestimate that collaborative relationship that a lender and a
Oh,
realtor will
100%.
have, because everybody has their different styles and different ways of looking at it. But when you find that synergy between those two partners, I think the
Hmm.
clients benefit uh, way more than if you have people that don't necessarily work together.
Yeah, 100%. Because I mean, right, we know like there's a lot of time that we spend processing through scenarios. And we
Hmm.
may say, hey, we're working with, Jill and John, made up names. Here's what I'm thinking. What do you think? What's the best scenario? What's their goals financially? And I can say, well, I know that's what they want financially, but $200,000 doesn't buy him anything in Greeley. And so,
Yep.
we can put our heads together and come up with a plan to help them become more successful. And so, like having that synergy, like you said, I think that's a good word. Um, is important. It's not 100% necessary, right? You work with other real estate agents and I work
Hmm.
with other lenders from time to time because ultimately it's the client's choice, right?
Agreed.
If they already have an agent, um, that's a real estate agent, that's who they're going to use. And if they already have another lender, a lot of times that's who they're going to use. And so
Hmm.
we can do it without it, but sometimes it is nice to have that relationship.
Yeah.
Yeah. All right. So a lot of times, from a real estate agent's perspective, I see people that'll contact me, and a lot of times they contact me first because let's be honest, it's more fun to look at houses than it is to fill out an application and start the process.
Yes, 100%.
And so usually I find if whether they have a house to sell or whether they are first time home buyers, usually they've spent time with Zillow. And I can't tell you how many times this happened to me this morning. I have a past client that sends me a Zillow link, and I didn't even know they were even thinking about buying a house. And
Hmm.
all of a sudden I'm like, oh, hey, it's a Zillow link. Hi, what's going on? How can I help? And they're like, hey, we just saw this one that just came on the market. Can we go see it? And
Hmm.
I find like a lot of times that's the case. And like this particular person, they have a house to sell. I don't really know what's going on and why they want to buy another property. Um, and that's fine, but that's always like that's the fun part about buying
Hmm.
houses is going and looking on Zillow and then going and looking at those houses. And so a lot of people start there, and that's okay. However, I always tell people, especially first time home buyers, we need to make sure that you know what you can afford before we see too many houses, and maybe even before we see one house. Because if we're looking at houses at $500,000, and then you talk to James, and James is like, "Yeah, your budget's like 350," then all of a sudden that house doesn't look very good because we were
No.
looking at 500,000. Now we're looking at 350,000.
Yeah.
And I found even like people that have they have a house to sell, and maybe they've owned their house for 5 or more years. They're used to a 3% interest rate. And now we're at like 6.5 or whatever it is today. And I'm like, you might want to talk to James and make sure you know what your payment's going to be because there might be payment sticker shock. Uh, so yeah,
And I run into that all the time. And
yeah,
also, too, for people, it's not just what they can afford as far as qualifying, but also what can they afford from a budget standpoint. So having the time to emotionally think through that first before you become emotionally attached to a house also is, I think, a huge benefit. Because how many times do people go, I have to have this house? So they're emotionally focused on the house and not on the budget and what they can qualify for, and they
yeah,
tend to stretch themselves beyond what they should at that
yeah.
point.
So that's why I think ultimately is a long way of saying, in an ideal world, get pre-approved first. Um,
Yes.
and I know we talk about this a lot, and you kind of alluded to it, talking about the budget versus your qualification. Why don't you dive down a little bit into that so that people understand what are you talking about? What do you mean budget?
Right. You know, let me contrast budget versus what you can qualify for. So different programs have different limits of what is called your debt to income ratio. So simply what that means is how much of your income can be used to service all of your debts. So existing debts and new mortgage. For example, FHA has a traditional limit of 55% of your income can be used to that. Conventional only has 50%. USDA has lower, like kind of more around the 43, 45, depending on scenarios. So let's go back to the FHA. Yeah, you can qualify to use 55% of your income to service your debts. However, everybody spends their money a little bit differently. So let's say you like to always take vacations. So you're always using some of your money towards your vacations, or your kids are in private school, or you have certain other obligations to help your kids in college or whatnot. So there's different things that have a pull on your budget that don't necessarily reflect on your debt to income ratios that are priorities for you and your family. So that's why you want to say, okay, I can afford from a debt to income ratio, let's just say $4,000 a month payment. However, your budget can really only handle 3,500 or 3,000 because of your own personal budgetary goals and priorities. So
Yeah.
that's why I'm talking about your budget should rule, not what the debt to income ratio says necessarily.
Yeah. So when they go to you and get pre-approved, you'll tell them what they qualify for according
Correct.
to like whatever program they're using. And then they need to go back to you and say, I know you said 4,000, but we're uncomfortable with 4,000. We want 3,500
Mm-hmm.
because of, and they don't really have to have a reason necessarily, but, you
Right.
know, that's just where they feel comfortable within reason. you know,
Mm-hmm.
I
Mm-hmm.
mean, let's be honest. If it was just what we wanted, I would be zero. But
That's true. The lower the payment, the better, right?
yeah,
So,
it is.
yeah.
But we also live in reality, and
Mm-hmm.
reality says we're going to have a pretty high payment right now.
Right.
So, yeah, that makes sense. So, if somebody's thinking and they're playing around and they're like, "Hey, we've lived in this house a long time. We've always wanted the three-car garage, or we've always wanted to live in this neighborhood. And, maybe we should think about that." And they say, let's talk to James and let's get pre-approved. And then they talk and they're like, yeah, but it may not be. I mean, it may be a couple months before we, find the right one or we pull the
Mm-hmm.
trigger. What's your thoughts on that? How far should somebody, get pre-approved before they actually pull the trigger on a house?
I think that's situational on some things. For instance, if someone's a first-time home buyer, they don't know what they don't know in the process. They don't know where their credit's sitting. They don't know a variety of things. Doing it sooner rather than later will be of immense value, because then we can start going through the process, educate, and if we run into any barriers, we have time to be able to address those, fix those. If not, then we know we're good to go and there's peace of mind. If someone is self-employed and has a very complex self-employment situation, I highly recommend let's start 2-3 months ahead of time, even if you're an experienced home buyer, because I've found that sometimes as you're starting to dig into those income documents, it raises some questions that, just for your level of stress and whatnot, just to be able to have that time to go, okay, we need to know this or that in order to make sure we have a solid pre-approval. The last thing you want is, to have to rush through that, because the stress level goes up, because buying a home is not a simplistic process. Now, if you're a well-experienced buyer, you've been doing this before, you have just regular W-2 jobs, getting started a month, 2 months ahead of time is not necessarily a bad idea. So I like suggesting people get started ahead of time just so that they have that peace of mind. And I've also found, a little side note, that once people decide that they want to stop buying a house and they say 6 months, oftentimes they actually pull the trigger a lot sooner, because they see that, they start looking and see that
Yeah.
house that they really like. And you want to be ready for when that,
Yeah.
if and when that happens.
Yeah, I see that all the time. I mean, people will call me, hey, this house just came on the market. We need to see it tonight. And I'm like,
Mhm.
okay. And we go look at it and they're like, this is perfect. This is the dream property we've been waiting for. And I'm
Yep.
like, cool, let's get you pre-qualified. And then they call, and then all of a sudden it's like, oh yeah, there's that one debt that we were going to pay off and they haven't paid it off yet. And they're not going to
Mm-hmm.
be ready today.
Mm-hmm.
I mean, that's happened so many times,
Yeah.
so many times. And so,
Well,
yeah, I
even
think there's wisdom there.
Yeah, and even too, if someone's thinks they're ready, they've been through the process, but they're like, yeah, maybe 6 months from now. Sometimes doing things ahead of time, a lender will be able to tell you, hey, you're qualified for this, nice and easy. But while you're waiting, if you also do this, you open up yourself more options, a different loan program, or whatever the case may be. Hey, let's use that time while we're waiting to make a good situation better.
Yeah. No, that's good. How long typically does a pre-approval last? If somebody is pre-approved, and let's say it's 6 months, do they need to renew that?
Yeah, there's a couple answers on that. Typically what happens is when I pull credit lasts for about 120 days from the credit pull to when we have to close. And if for some reason we go longer than that, all we have to do is refresh that pull. Documentation is only good for a certain amount of time. Typically, they want to see, like with pay stubs, for example, they want to see something within the last 30 or 60 days with that. If it goes longer than that, we'll just need to get an updated document. However, as far as it being good for, as long as a person's situation doesn't change, no new debts, they make all their payments on time, they do all that kind of stuff, I feel pretty confident that, that pre-approval will go through if you just, maintain what you're doing at that point. Also, side note, make sure your credit card balances don't start shooting up during that time, because that could change your credit score if we have to repull it at that point. So if you're kind of thinking 6 months ahead, sometimes what I'll do is I'll go ahead and do a soft pull on your credit just so it doesn't impact your credit, get all the confirmation I need, and then when you're ready, do the hard pull, get the updated documents there, which should be hopefully fairly simple, just recent pay stubs, etc., and bank statements, and you should be good to go.
Yeah, that kind of brings up a couple questions that I get asked as a real estate agent. One, I mean, I've had clients who are really afraid to fill out an application with a lender because they're like, well, but it's going to hurt my credit.
Yes.
And I'm usually like, yeah, I mean, they're going to have to pull your credit. I mean, that's what credit is for.
Mm-hmm.
What do you say to people when they come to you and they're like, well, I'm worried. I don't want it to ding my credit.
Right. I think the whole dinging your credit is kind of a little bit of a misnomer. Just doing some research on just, how much does a hard credit pull for a mortgage ding your credit? And my research, just trying to find an answer, said, well, maybe by 5 points, give or take, on that side, which is not a big deal. And if you pull your credit multiple times for the purposes of a mortgage within a 45-day period, it still only counts as one credit pull, because the credit agencies assume that you're shopping around trying to find the best deal, which they encourage, and it's a positive, not a negative.
Yeah.
Now, a credit pull for, credit cards, car loans, and all that stuff, you start doing multiple pulls for that type of stuff, it'll affect you more negatively at
Sure.
that point. And then with a soft pull, it doesn't affect your credit at all. It gives the lender all the information they need to make a credit decision, typically, especially in the case of a conventional loan, at least through us here at Guild. But it really kind of gives us a little bit of a heads up and all the data we need. So, that's what I tell clients is, like, first of all, it's not as negative as you think. But also, if you're really super concerned, let's do a soft pull. Let's get you pre-approved, and then do the hard pull when you're a lot closer.
Yeah. And so I guess that's maybe some good advice for people out there if you are worried about it. For whatever reason, maybe your credit's low and you're worried about not having good enough credit, or maybe your credit's high, you've worked really hard and you don't want it to get damaged. Initially, talk to James or whichever lender you're working with, and say, hey, can we just do a soft pull to start things off? And kind of go from there.
And typically, 5-point drop for a mortgage application is nominal.
Yeah.
So unless you're around that 620 range, where it could be the difference between being approved or not approved. But at that point, what you're doing is you're going, okay, let's see what the credit is. Is there any ways to build that credit up so that we can put ourselves in a better position, especially in that 4 to 6 month or whatever time period you're waiting for. And there's usually some low-hanging fruit that can help with that.
Yeah. So then now the second question that I get asked fairly often, not as often, but fairly, is what do you need to get a pre-approval? I mean, I know like the mortgage process, there's a lot of paperwork that's
Hmm.
involved, but let's say just to, if I'm looking for a house and say, hey, James, I'm looking at this house for X number of dollars. Can you get me a pre-approval? What do you need from a paperwork perspective typically?
Right. Well, taking a step back, really what I'm looking at is I'm looking at a couple different things. Number one, I'm looking at credit. What's your credit scores? Because that's a pillar. And then that's really doesn't involve that much paperwork, really. I'm pulling a credit pull at that point and I get all the data. Second thing is income. And that's where it becomes, that's the most paper document heavy part of that.
Sure.
And what I'm needing to do is be able to take a look at a client's income and go, what of their income can I use to qualify them? Okay. So I'm going to need most recent pay stubs. That kind of proves you're still employed and what you're currently being paid. I'll need W-2s, sometimes 1 year, sometimes 2 years. And then sometimes, especially if people are get lots of overtime or whatnot, sometimes I'll ask for the very last full pay stub of the previous year because it usually gives me all the year-to-date numbers, which just helps speed up the process. So those are some of the paperwork for kind of just a regular employed person. Now, if you're self-employed, that's where it gets pretty intense. And I wish it wasn't this way, but I think the regulators have gone, there's so many nuances for a self-employed person. Sometimes it feels like they want your firstborn as well, unfortunately. So that includes tax returns for the past couple of years, sometimes your business tax returns, your K1s, your all of that type of stuff, because what they're wanting to make sure is that we as a lender perfectly understand your financial obligations so that we're setting you up for success with that new mortgage payment. So that's where I think that's the most, document heavy stuff.
Yeah.
Um, as far as that goes. And then the third part is really savings. What do you have for down payment? That doesn't necessarily make or break an application, but definitely does tell me which direction I want to go. Do we need down payment
Sure.
assistance? What are our options? So typically we're asking for the last 2 months bank statements for your savings accounts and for your checking account and stuff like that, or some variation there, just to kind of double check that. So those are kind of like the pillars. When I have all three of those, then I can check your debt to income scores, which will then determine how much you theoretically can afford.
Makes sense. Yeah. 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 And as a self-employed individual, um, I can attest that it's complicated. And I would say
Mm-hmm.
it probably gets most people get irritated or aggravated in the process. But, the reality is you guys are trying to make sure that you put us in a good loan.
Yep.
You're doing as best of a job as you possibly can to make sure that I don't default on my loan or I don't, buy something I can't afford and then it forces me to go into foreclosure.
Yep.
And then you're also having to, after the transaction's done, you sell the loan off to the secondary market and you have to meet all those requirements
Right.
there as well.
Well, and I know some people have this faulty image. Maybe Hollywood kind of spurred this, where you've got the greedy banker in the background going, "I hope they default so I can get their home." It's like that's not the case.
No.
It is a pain in the neck to foreclose on somebody. Plus, just the fact of oftentimes for a person, the home is a dream, and we want to make sure it's a blessing and not this albatross that's hanging around your neck, just sinking you under.
Yeah. Yeah. I mean, I'm not very involved in the bank process. However, I've helped people that are buying foreclosures, or maybe they have started to kind of go down the foreclosure process. And banks don't like that. Like it's not good for them. They don't
No.
make more money. They lose money. Like it's just bad all around. And so
Hmm.
trying to keep people out of that, I say it's painful today, but if that pain saves you a lot more pain down the road, it's worth it.
Agreed.
And so a lot of people, right, they go and they get pre-qualified, but a lot of people right now have a house to sell too. And so this kind of brings us to, the second scenario, somebody getting, starting the process. And again, even the people that want to sell their house, they usually like looking at houses first, and then
Mm-hmm.
they like getting pre-approved, and then they get their house ready to sell. And that works. However, if you find the right one, you can find yourself in this absolute mad scramble because we can get contingent. And what we talk about contingent offers or contingent contracts. And what we mean by that is we're going to put an offer on a new house, but that offer is contingent upon you selling your house, your current house today.
Mm-hmm.
And the reason is because in order for them to qualify to buy the new one, they have to sell the old one. Typically, that's not always the case, right?
Right.
And so what I find I'm coaching a lot of people right now. It's like, okay, we don't know when to put yours on the market, and so they ask, well, do we put our house on the market first, or do we find the replacement property first? It's like, well, first we get pre-approved, but while we're getting pre-approved, almost explicitly, it's let's get your house ready to put on the market.
Right.
Whether we put it on the market first or whether we put it on the market second, we still need it ready to get on the market. And sometimes, like right now, my photographers are super busy because there's a lot of properties hitting the market. And I mean, they're 7 days out. And so I usually tell people, like, if you're thinking about it, let's get your house ready to sell. Let's get it, decluttered usually is the big thing because we tend to fill the space that we have.
Mm-hmm.
Get it decluttered. You can have me over and I can walk the property and I'll tell you things like, hey, I would update this, I would fix this. Usually it's not as much as people think. Most people are like, I want my house to be perfect. And here in Greeley, it's like, well, yeah, but your house is a $400,000 house, which is a below average price point for Greeley. So it doesn't have to be perfect. Like buyers
No.
don't expect that. And so I'll help gauge like this is what buyers would expect. And then you get all that done. And then we schedule a photographer. They get all the pictures and video and we do all of that. And then I just sit on that. I just sit on all that content. And if we are going to list your house first, we go ahead and list it. A lot of times we're like, let's see if we can find the replacement property first. And then we'll list yours and we'll go down that road. But that's a situational thing for me
Mm-hmm.
because I always try to figure out what's going to be the hardest property. Is it going to be harder to find the property they want, or is it going to be harder to sell the property they have? And I mean, who knows? Sometimes like we have some clients now that it's kind of like 50-50. It's like, well, their property is not going to be super easy to sell, but the one they're going to look for is also doesn't come on the market that often either. And so we kind of have to line things up. And that's why like being ready on the sale of your house
Mm-hmm.
is really important, right? Because if I
Yeah.
put an offer in and I say I can't get their house on the market for 2 weeks, then they're not going to get that accepted.
No.
I need to be able to say, hey, we can put it on the market in 2 days, and we will guarantee that we'll have an offer in like 3 or 4 weeks. That's
Mm-hmm.
typically what we see in this market. But
Gotcha.
and it's still not. I mean, you still like we can get those accepted, but there's still sometimes we can't. Depends on the property that they're trying to buy. There's some properties where they're like, nah, we're not going to do that.
Right.
So
It might depend. Do you find it depends on just kind of the seller's situation and
one hundred
maybe how
percent.
long their house has been on the market?
Yeah. Yeah. I mean, it's always, I mean, we're always dealing with people
Mm-hmm.
and so some people are super easygoing and they're like, yeah, you know what? We're not in a hurry to sell our house. We'll give you time to get yours under contract. That's not a problem. And then there's some people that are like, look, we would love to, but we have got to get this house sold in 30 days, no questions about it. And then a contingent offer is a pretty hard sell at that point,
Yep. Yep.
So it does add a lot of complexity to a contract because now we have two houses that have to do everything,
Mm-hmm.
inspection and appraisal and all the rest and finding buyers. that kind of thing. But we're seeing a lot of those right now. At least I
Yeah.
am. So, so at the beginning, just get your house ready. Have me over. I walk it. We'll look. We'll look at things. I'll give you some suggestions. We'll schedule photographer. We'll have all the content. I've got, I think, 3 properties right now that I have all the content and everything ready, and it's just in my on my computer, and I'm just ready to push play whenever we find the right one. We'll get it on the market. Super.
That's awesome. Now, question about getting your house ready. Do you find that people end up doing far too much to their house or just really don't know what they really truly need to do to get their house ready?
Um, yeah, I mean, sometimes people don't know what to focus on.
Mm,
A lot of people are like, "Oh, I need to my furnace is 20 years old. I need to replace that." And I'm like, don't replace your furnace typically because you're not going to get your money back out of it. Just
right,
it's old, but it's working, right? If it's broken and it's not working, then we need to fix it or
right.
get it replaced. But if it's working, just leave it. They're going to do an inspection. We'll tell them it's old. We're not hiding anything. But then if that's an issue, they'll either ask us for concessions, they'll ask us to replace it. We can address that down the road. That's not going
Hmm.
to prevent somebody from buying that property. Now if it's you walk in and the carpet is just trashed, it's really gross, let's say you had a lot of pets and it's 30 years old or something.
Hmm.
Sometimes it's like, let's replace this carpet because I think this is going to be a big deterrent for people, you know,
Right.
or like touch up paint is a big one for me. Um, Especially if the property's vacant. When a property's vacant, everybody sees the floor and the walls. And so it's like we need to make sure the floor and the walls are good, and in great shape if it's a vacant property. Ideally, we stage the properties. But depending on the price point, sometimes it just doesn't make sense because staging is really pretty expensive on if they have to
Hmm.
bring furniture in. So usually people, homeowners that have lived in the house, they tend to be way more particular about the things that they want to fix than they really need to be
Need to
typically.
be. Okay. That's good to know.
Yeah.
So, in other words, talk to you first before doing too much.
Yep. I always tell people, have me over, and people are like, "Oh, but I need to clean my house first." I'm like, "Don't worry about it." It's like I see so many houses. I can see past those things, and I'm not there to buy your house. I'm just there to give you advice on how to buy your house. Right?
Right.
If I was going to buy it, then I would say, "Yes, by all means, make sure it's looking the best it possibly can so that I feel good about it." But I'm not the buyer. I'm the guide trying to help you through the process.
Hmm.
Um, and I may tell you, be like, yeah, we need to get the carpets cleaned, or we may need to do some touch up paint, or you know, usually like I try to do this in a way that's not offensive to people.
Hmm.
Usually, people need to declutter their house,
Right.
right? And people hear that and are like, oh my gosh, I'm a hoarder. It's like, no, you're not a hoarder. You're living in the house.
Yeah.
Right? You're living here. We
Hmm.
need to sell it, and to do that it needs to look less full than it would if you were living there. That's just the reality
Yeah.
of it. So that's usually the big thing that people have to do. But yeah, if you get there, you get your pictures, we're good to go. You've got their pre-approval from you, and now we're looking for the house, and maybe we have their house on the market in the meantime depending on the situation. But now they're looking for the house, or at least they're getting ready to look for the house. All right. So let's back down and let's say, okay, now they're they're ready. They've got their house prepped to hit the market. What is involved now when they focus back on you and they're getting their pre-approval? What's involved in that process of getting pre-approved?
What's involved in the process of getting pre-approved? Basically, what I'm trying to do is I am trying to accomplish several things. Number one is confirm what income we can use. That's a big part of that. Also, check credit, check your basic financial situation, and identify if there's any questions, any barriers, any issues that need to be addressed. And once I do all of that, then I can come up with you are pre-approved for a purchase price of this. Now, when I go through a pre-approval process, I am making some assumptions. I'm assuming a certain level of property taxes, homeowners insurance, credit staying the same, and the fact that you're going to keep your job, all of that type of stuff. But what I'm really trying to do is remove any uncertainty that the house that you're going to look at works or doesn't work. So so that's kind of really what I'm looking for to do, and also too to make sure that you're comfortable with your new financial situation.
Yeah. So that's where you go through the credit scores, the income, the savings, you figure all those things out, and then you give them a pre-approval, which is, from my perspective, it's going to be a letter that you send to me saying that
Yes.
John and Jill, made up names, are pre-approved for $500,000, right? Made up number. And then I have that. And then why do I have that? Like, what's the point?
Well, it's really kind of letting you know they've gone through the process, and then I believe you take that and submit that with an offer letter, or with the offer, and that tells the selling agent that we're not just making things up, but this for them eliminates some of the questions and some of the uncertainty as well.
Yeah, as a listing agent, I absolutely will require, and now it's not my decision, right? If I present an offer that doesn't have a pre-approval attached to it, or even proof of funding, right? It doesn't have to be a loan; it could be cash deal. But even if it's a cash deal, I want to say, do they have the cash? Where is it? Right? I need some kind of document, some kind of evidence that says Jill and John, they have the ability to purchase this property. If I don't have that, my advice to my sellers is don't accept this. Tell them, go back, talk to a lender, or go back to your bank and even like print me off like, a statement, and you can redact all the sensitive information, but I need to see that there's money in your account. I need to see that you have the ability to purchase this. And that's really what, as a listing agent, we're looking for with a pre-approval. And it's going to come to me. And if I'm on the listing side and James sends me a pre-approval, or James's buyer agent sends me a pre-approval to buy one of my properties, usually the first thing that I'll do, or at least eventually, is I will give you a call. I'll call you, and you're good, right? You probably will have called me first. But I want to make sure that I touch base with you, because I want to know, it's like, okay, I got this letter that says that Jill and John are pre-approved. Is there anything that I need to know about this? How do you feel about it?
And oftentimes when I have that conversation with a listing agent, usually I'm speaking to, just because sometimes there's things about the situation that you just can't put into a letter or whatnot. For example, if someone has a strong credit score, like an 800, for example, I'm not going to put that in a letter because it's inappropriate. But in a conversation, I'll be like, yeah, these are dream clients. You couldn't ask for a better situation here. We've done this, and this with the pre-approval process. And oftentimes that can make or break an offer being accepted.
100%. I know, like, and it's not, we don't see as many of them right now. We do see some, but not as many. But we used to see multiple offer situations all the time. And one of the things that we would do in multiple offer situations is I would say, okay, I just submitted an offer on 123 Main Street. James, can you call the listing agent and just, touch base, right?
Yep.
That way the listing agent doesn't have to call James, and the listing agent feels better and be like, oh, okay, I feel pretty good about this. Now, ultimately it's the seller's decision, but when when the listing agent's presenting those offers, and let's say the listing agent has 3 offers on the table, and the listing agent's going to say, hey, this one, I couldn't get a hold of the lender. This one here, things aren't really that good. I don't know. I don't feel good about this one. This one here, I feel really good about, because James called me. We talked about the situation. He said they're dream clients. He said he's really comfortable with it. all the rest. And he's like, maybe that one isn't even as high of an offer, but a lot of times they'll still work with that. And if it was me and I was the listing agent, I was presenting that, I was like, here's my recommendation. I think we should counter this offer back and see if we can make it financially as good as this other offer, because I think
Hmm.
we should work with them. I feel better about it. And a lot of times listing or sellers will do it.
Well, and I find too, and just in my experience, it's not just how much money is on the table, but it's the parties that you're working with that can
Yep.
make or break a deal. And if agents tell a client, the seller, this is a solid realtor, solid lender. I've done many deals with them. They always get it to close. I think at the end of the day, that's the ultimate goal is, can we get this to close? And
Yep.
if they feel a lot more certain with one over the other, you know which way they're going to be leaning.
Yep. Because at the end of the day, it doesn't matter how high your offer is. It matters what the price is when you close. And if you have an offer that's 50,000 over asking, but it never closes, who cares?
It's worthless. Yeah.
You just wasted your time and probably wasted tens of thousands of dollars in the process.
Yep.
And so that reputation piece, both on the lender and on the real estate agent, like I cannot tell you how often, like I have encouraged people to accept offers because I know the lender and I've worked with the lender before. And I know I've gotten offers accepted because other agents have used me or have done deals with me before. And they're like,
Hmm.
we've worked with Jamie, he gets to the closing table. And I've done the same, when I'm working with other agents as well. And so that reputation is a big deal.
It's very important. Yes.
Yeah. All right. So they've done all the work. How do they know now that they're ready to start looking for a house? Move to step two now. How do they know?
How do they know?
Yeah.
At this point, really, have you been pre-approved for the mortgage? Do you know what those financial details look like? And are you comfortable with that? Okay, check. Have you sat down with the realtor to discuss what your needs and goals are for the new house that you're purchasing so they can help you in that process? If you haven't done that yet, then we're just kind of shooting in the dark. And, if you have a house to sell, then is it ready to flip that switch to get that on the market? And have you ascertained what that timing is and what that should look like based on kind of your previous point on, do we list first? Do we buy first? What do we do? So once you have those three things answered, then I think you're pretty much ready to go if the timing's right for you and your family.
Yep. Yeah, 100%. I think that's absolutely right. And this is again why it is very beneficial to have a realtor and a lender who have good synergy together,
Mm-hmm.
right?
Mm-hmm.
Because depending on the situation, there are some situations, right? Like we've been working on quite a few recently where we're like, okay, how much money do they need off the sale of their house? We need to make sure we have that number down so it
Mm-hmm.
sets them up for success buying a property. And we have to have that cadence back and forth on a regular basis to make sure that we understand what's going on. Because if they don't have their house under contract yet, I need to make sure they don't accept a contract that's going to jeopardize their ability to purchase. And if they don't
Yep.
have one uh, identified to purchase, they need to make sure that rates aren't going to go up and change what they can afford or change, what they qualify for or change that monthly payment to a certain
Mm-hmm.
extent. And so there's a lot that goes into just making sure um, they're ready, especially when they have a lot of dominoes to fall like that.
Agreed. And one more comment too in that vein is, especially from the lending side, because this part is a lot more lender heavy than stage two,
Yeah.
the more work you can do up front, especially in the pre-approval process, there's some, conditional pre-approvals and more solid pre-approvals, but the more work you've done up front, the smoother the process will be in the back end, and quite frankly, more enjoyable stage
Yeah.
two will be the shopping
Yeah.
process.
Yeah, that's good, great advice. I tell a lot of my buyers the same thing where I'm like, get James as much of the documents as you possibly can right now. Like
Hmm.
you're not going to say, "Oh my gosh, I wasted 10 minutes sending him, my tax returns. It was such a hassle." Don't worry about that, because if you get that to them, then the tail end of the transaction will be a lot smoother, will be less
Hmm.
stress free. And if there is going to be a hiccup, let's find that out at the very beginning. That way we can address any of those things and we can just, move forward. I think that's great.
Agreed. And it's easier to find documents before you start packing them up because you're trying to
Yeah.
move, just to say.
Yeah. No, that's true, because a lot of times people think like once you get under contract, then it's smooth sailing. And it's like, no, that's when things really ramp up
Hmm.
and we ask for a lot. And you're gonna be going a million directions, being asked a million questions, having a million documents thrown at you. And
Hmm.
the farther ahead of that you can get, the better off you're gonna be.
Agreed.
Cool. Well, that's kind of all I can kind of think of, getting ready before you start looking for a house. You have any final thoughts before we move on to the next step?
No, I think we've covered it all. Again, I cannot stress more. The more you're prepared on the financial side ahead of the game, the much better the whole
Hmm.
process will be. I cannot stress that enough.
Yeah.
So, and
Yeah,
I've
I
had
think that's
clients
smart.
say that to me many, many times, and
Yeah.
agents as well.
Yeah, 100%. 100%. And I mean, at the end of the day, like we want to say like we're treating this like there's a formula, but we're dealing with people. And
Hmm.
every person has their own financial situation. Every person has their different dreams and hopes, and they want their different property, and everything is different. And so there's no formula to this. This is
No.
we need to look at the situation. We need to look at your goals and what you want to achieve. And we need to put our heads together and figure out how do we do that. And so the
Hmm.
sooner we can do that, the better. And the more information you can give us, honestly, the better. And we can help guide
Agreed.
you to be successful down the road. That's our goal.
Yeah, 100%.
All right, James. Well, I appreciate it. Appreciate your time as always. And hope you have a good rest of your day. And we'll talk to you next time.
All right. Thanks, Jamie. Appreciate it.